Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
Thanks for tuning in to our Real Estate Radio Power Investing program, where we empower you with the education to maximize your investing success. We're broadcasting from the Silicon Valley corporate headquarters of Wilson Investment Properties, the sponsor of Real Estate Radio Power Investing. Wilson Investment Properties is a national syndicator of multifamily and commercial properties, where you can buy private shares of ownership and an LLC or corporation that owns a kind of property that normally only large private investors or institutional investors can invest in. I'm Tom K. Wilson, your host for this weekly show on multifamily and commercial investing and syndications. If you can't make the live show, you can catch your podcast on wilsoninvest.com. We've been podcasting and broadcasting for 6 years now, and we really enjoy bringing on wonderful guests and topics to help educate you and make your best decisions in real estate investing. You can go to also bacom.club, BACOMM.club, for information on monthly education meetup venue on commercial and multifamily investing with world-class speakers. It meets on the fourth Thursday of each month generally, and go to bacom.club to find out when the next meetings are and who the speakers and topics are. Our program today is about, indeed, the investing in commercial and multifamily property. And we have Helen Chong with us today, who is going to be talking to us about her experience with investing and as a broker and a part of a group that helps investors start off in this arena. She'll be sharing with us her thoughts about that. So go to wilsoninvest.com for our weekly newsletter on economics about real estate. Also, you can sign up there and get access by having a relationship with Wilson Investment Property Syndicator to properties and deals that are only available to those who have a relationship with our company, which is typical of syndicators because of the SEC regulations. And we always appreciate your questions and suggestions, and we're always available to answer questions for you. So today we have Helen Chong with us. She is with CCIM, which is a organization that's the most professional organization in the nation that is a leader and educator about commercial and multifamily properties. She's NorCal CCIM president-elect for this coming year, and I've attended some of the meetings and been honored to speak at some of the meetings that they've had in the Bay Area, San Francisco Bay Area. Helen's a UCLA graduate within economics, and Helen, welcome to the program.
Hello, Tom. Very happy to be here.
Nice to have you back.
Yeah, thank you. I'm so excited about today.
Good. Me too. So, Helen, give us a little bit about your background. How did you get involved in real estate, and how long you've been involved in it, and when did you get involved in commercial and multifamily properties?
Sure. So, as a matter of fact, like you mentioned, I graduated from UCLA with an economic major, and I went straight into becoming an analyst at a pension consulting firm, and I worked there for 4.5 years. And in year 2002, if you remember, there was like a dot-com bubble bust.
Yeah, sure do.
Yeah, and so I was basically an analyst preparing all these reports for our institutional clients. Obviously, they have thousands of employees, and then I was looking through the reports, and I saw that the portfolio value dropped 50 to 75%. And then in the back of my mind, I was just thinking, what if that person needs to retire that year? What will happen to them? What if that happens to me? What if that happens to my parents? And to me, it's just like so out of your control, right? You're thinking that I'm set, I have these pension here, but at the same time, you pretty much left the money there and under control of someone else's. So I started studying for other type of investment strategies, and when I read and studied about real estate investments, that's when I fell in love. I was just like, this is it. This is how I can take control of my financial future. And so that's how I started in real estate in 2004, 2005.
You know, what's strange is that that was cycle number 4 for me. I moved to what was to become Silicon Valley in '69 and started investing in 1970 in real estate.
Wow.
So I felt, well, traditionally when the jobs fell and unemployment went up, such as it did in the dot-com bust, is generally when real estate would drop down because you had people with less money to be able to afford it. And yet single-family home prices kept going up. And I thought, what is wrong? I can't figure this out. Commercial properties, which are based upon income, right, went down, but single-family homes went up. So, you know, long story short, I eventually learned that we had a credit bubble. Yeah. And I thought, when I got the numbers behind my hunch, I started selling off single-family homes. So that dot-com bubble bust kind of made you think about what made sense to be involved in.
Absolutely. I mean, once I studied about the real estate and I realized that, gosh, you have so many different ways to invest in real estate. You can take control of it. You can leverage. You know, stock market definitely cannot leverage, right? So
you can, but it's
very risky.
Very risky.
Very risky. Yeah, and then there's tax benefits, and also there are different exit strategies that you can do. I can analyze the heck out of it since I was already an analyst. So to me, it just seems like and
it's a real asset.
Yeah, it's a real asset. You can actually touch it. I don't have to worry about like someone else taking control of my investment. So that was the reason why I switched.
Okay, and so you are now you founded the Helen Group.
Yep.
Yeah, Helen Group. You're founder of that, and you're a multifamily commercial broker.
Yep.
And when did you get involved in CCIM?
So as a matter of fact, the Helen Group was actually started as a residential brokerage firm at the time. And that was, I started in the real estate back in 2005. I was doing residential real estate sales, and then I invested in single family myself.
Now, when you use the term residential, you're referring to
just like 1 to 4 units, exactly. Yeah. I haven't learned about the apartment side yet. But in 2007, around there, that's when I learned about apartment investing, and then learned about the analysis, how to analyze evaluate apartment buildings, and I was so fascinated by it. In a sense, like saying 1 to 4 units, you are evaluating it by comparing your other properties in the area, right? But for apartment building, it really depends on the net operating income. So that even take more control, because now I can control the income, I can control the expenses, so that I can increase my value by doing different strategies.
You know, a lot of flippers are those that hold rental houses, and we've both owned them, and I'm glad I did. And certainly, and I still have some of those properties. But I've mostly moved my money into multifamily and commercial. But you know, you can remodel a kitchen in a rental house and get some increased income, but it's not a very good return.
Right.
But you can add value to a multifamily for get a lot of higher rent delta for whatever you do to invest in it to improve it generally than you can a house.
Exactly. I mean, yeah, I used to do flips as well, just buy a rundown single family, and then I put in all this money in there, and hoping to sell at a certain price. So the decision factor or the market value of the property is still kind of really depends on the market, depends on like what the neighbors have sold for. But for apartment buildings, literally before I even start the remodeling, I already know what I'm going to get out of it.
Has nothing to do with somebody's emotional value,
yes,
is it, right?
Exactly.
It has to do with the income.
Yes.
And by the way, when you're doing flips, did you find that was really easy, or it took a lot of time and work?
Oh, definitely took a lot of time.
Sound like your experience was a lot like mine. Yeah, I made some money, but whew, that was a lot of work.
Yeah, it was a lot of work. And on top of that, for me at the time, it's funny, I don't know, I generally look a little bit younger, I guess. So when I met with these contractors, they didn't really take me very seriously. So I was having a hard time talking to them. So I would send my husband in. I was like, you need to get on the phone, just talk to them. I think they just needed to hear a guy's voice so that they would take this project more seriously. So at the time, my struggle was kind of like, gosh, I have to deal with these contractors and they're not listening to me. But as soon as I have my husband come in, they're like, oh, okay, sir. Okay, we'll do it.
Well, I bet they take you seriously now.
Yes.
Let's go take a break here, and we'll be right back on Real Estate Radio Power Investing with Helen Chong and talk more about commercial and multifam investing.